What's going on, guys? Welcome back to another video. So in this one, we have a lot of very interesting things to cover. But first, sorry about my voice. It was Halloween weekend last weekend. It is what it is. But there are some really important catalysts happening tomorrow, later this week. And we also have earnings season out as well to really be bracing for and looking at. So there's a lot of things that are happening with not only the United States right now, but with the entire world economy that we need to be aware of if we are even still just going to be trading in the US markets here. Now, we have seen this specific catalyst happen a few times over the last few months, and we have seen a lot of volatility. So I really want to get through this with you guys and make sure that you guys have the best information going into the end of this week here. So again, before we get into all of that, if you do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who actually want to learn. And again, if you do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into it here and take a look at the SPY. So looking at the trend here on this daily time frame, we are trending up here. We have seen a lot of chop. MACD kind of fluctuating around here. We do see the RSI, the relative strength index, above 50, above its moving average. But with all of the important catalysts that we have coming up towards the end of this week here, I've said this a few times, but personally, I'm not taking any swing trades right now. And even if I was going to, I would be getting way more time on these contracts than I think that I actually need because of the volatility and the volatile moves that we're seeing on these overnight gaps up and gaps down. But again, these intraday moves, there is a lot of money to be made. And again, I would watch out for a couple of these levels up here, right around 393, this 200 EMA on the daily here, right around 403 as well. And again, I do want to highlight some of our members here. Red Ape, Donnie, Trade the Trends. We have a lot of people that are really crushing it here. But again, I can show you guys gains on gains on gains. The results speak for themselves. But again, the learning, the curriculum videos, the live streams, the proprietary trading algorithms, and the community that we've built is really going to help you guys take your trading to the next level. So if you guys are interested, make sure you guys check out that link down below. But I do want to talk about the dollar here, but we are going to put this a little bit on pause because the dollar is going to relate to what we are going to be talking about a little bit later here. Now, the main thing that I want you guys to be paying attention to over these next few weeks are these gilt sales. Now remember, we saw the Bank of England step in to buy a lot of these UK government bonds in order to stop these yields from going out of control and their pension funds from collapsing. Now, what did we say was the sequence of events? Well, they were going to announce those bond purchases. They were going to announce the stopping of those bond purchases. Well, then they're going to have to announce that they're going to be selling off some of those bonds. Tomorrow, as we are going to see right here, first asset sales from the bank's quantitative easing asset portfolio will start Tuesday. Bank of England gilt sales set to resume as the UK lending drops. Now, here's why this is important, and these are things that we need to go over here. So, looking at the 30-year gilts, which were really the bonds that the UK started buying initially. They did expand their horizons and started buying some of these different bonds as well, but these were the ones that everybody was really focused on. Now, we saw this rip all the way up here to this high level at around 5.118% yield. And what date was this? Well, it was between Tuesday, September 27th and Wednesday, September 28th. Now, what we like to talk about a lot, and you guys hear me do this a lot on my live streams, is the dollar. Now, what was happening with the dollar at this time frame here too? Well, remember, the pound was weakening and the dollar was shooting up. Now, what is this date right here, this date range of these peaks? Well, we can see that this initial peak right around Friday, September 23rd. And as we get into this more recent peak in the dollar, this 52-week high, Wednesday, September 28th. Now, what typically happens is that when the dollar is getting stronger here, asset prices start to come down. So what's entirely possible with what we're going to see out of these Bank of England asset sales is we are going to see these yields starting to come back to the upside unless there is a strong amount of demand and they're able to basically facilitate these sales without really moving these markets significantly. But again, the Bank of England right here steps in, tanks the yields. It starts running back up. They start stepping in and buying these bonds, tank the yields again. Now their goal is going to be to not break their entire bond market and their pension funds. But the track record over the last few months in the UK has not been great. So this is something that we need to take a look at here. So if we end up seeing the dollar starting to come back up, well, we're most likely going to see asset prices come down as well. So this is where things get interesting. Tomorrow is going to start these asset sales, and that is a high probability of having uncertainty in the market. We don't necessarily know what's going to happen with this. The logical outcome is the dollar is most likely going to start appreciating over the next few weeks as we start to see these bonds come back into the market. Now, a couple of the other things that I want to talk with you guys about before we wrap up this video here is what's going to be happening at this Fed meeting on Wednesday. Now, we're going to talk more about this in a video tomorrow to get you guys really prepared, but there are some interesting statements being made. There's a lot of back and forth going on, and what the market's really expecting right now is a 75 basis point rate hike on Wednesday. Now, December is really where everybody is having contention on because a lot of people are calling for what they would like to call a Fed pivot. Now, I personally don't see this as a pivot. We are still going to get up to that 4.5% to 5% terminal federal funds rate. And personally, for me, I want to wait and see how the economic data is going to react and if the Fed is going to go higher with rates after we get to what they have deemed previously as being the terminal rate or the highest that they want to take these rates to. But what a lot of people are reading into here is not necessarily the rate hike number that is going to be coming out on Wednesday, but what is Powell actually going to say? Is he going to come out more dovish and lean more towards a 50 basis point rate hike in December based on the data that has recently come out? Remember, we did not react very positively to the CPI data that came out recently. Our labor market is still looking relatively strong, and we're still not seeing all of the different aspects of CPI starting to come down. Remember, we were talking about rents and how if home prices are going to continue to come down, but rates are going to be extremely high, you're going to see a lot of people forego going into the housing market, going into the renters market, and adding into rental inflation, which can come back into CPI. So Jerome Powell in the Fed is walking a very, very, very tight line right now, and they're trying to keep everything kind of within the borders of what is acceptable by large market participants. And that is what's called and what everybody's referring to when they say a soft landing. They're trying to get everything under control. But as we start to see us get closer to the end of the year, there are going to be they do need to make some very, very key decisions. So again, that is mainly going to wrap up this video here, guys. Again, we do have earnings coming up this week too. We have Uber tomorrow morning, AMD after close tomorrow. Wednesday, we have Roku, Qualcomm, Marathon Oil, CVS, and a couple of other big companies as well. But these are going to be more sector by sector companies. When these companies report earnings, unless something absolutely crazy happens, they're going to affect the other companies in their specific sector a little bit more than they're going to have an effect on the overall market. So last week was the big earnings week. We're coming in now. We are going to see those gilt sales from the Bank of England starting tomorrow. We're going to have the FOMC meeting on Wednesday. And yes, we still need to worry about earnings here. But what I would look for more is that if you do decide to swing trade anything, be very, very cautious of when any related companies in the company you're trading's industry is reporting earnings, because that can have an effect on the position that you are trading. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great week. I'll see you guys in the next one. Peace.